We welcome in Mish Schneider, Chief Strategist, marketgauge.com. Mish, good afternoon to you. I just had a great conversation with Futurum Equities, and they have these names, these 15 names, not NVIDIA. It was a little bit of everything else: Qualcomm, Micron, Broadcom, Oracle, Palantir. These were interesting names that they liked. Do you think that we go beyond AI here and see new highs for many names?
Well, I do believe that. I listen to Shai's segment, by the way, and I follow him, so I'm well aware of how intelligent he is on this subject. And I think he was heading in the right direction. Definitely, we haven't seen the second-tier wave of AI. And also, I'm interested in it from a little bit of a different perspective, because I think you need all perspectives on the table, right? And so number one is we still need energy to run all these AI data centers. Where is that coming from? So that's where I'm looking a lot. Uranium had this huge move because of nuclear energy being a part of it, but that's still a little bit premature. So I'm still looking at some of these other areas: solar, wind, even oil and gas, natural gas being our biggest commodity that we have here for energy and still really cheap, and wondering at what point do they start catching a bid. And then, of course, I'm looking at the companies that you really need to keep these AI data centers going beyond the software. Shai mentioned hardware, but I'm taking even one step level below that, which is like Chemours, which I put on the list for you, which is a company that's a chemical company, but one of the things they make is Teflon, and these semiconductor chips need a coating to operate, and they have a huge number of companies already that they're aligned with for orders for these Teflon's coatings. So, there's so many different places to look, and that's just the technology. It's also going into retail and biotechnology and everywhere else.
So, also the big picture here, as you said, you really like to have a portfolio filled with not just AI, but a multitude of things. You also had on your mind oil, silver, gold. Are those good investments now?
Well, it's silver for sure, because silver has been on a tear and then it consolidated. I look at the ratio between gold and silver. It came down, but it still hasn't really broken what I consider to be critical levels where silver becomes a narrative more than gold. Gold is still doing very, very well. I don't know where the bears are coming from. And that's all related to a couple of other things. Number one is the direction of the dollar, the direction of interest rate. We still have a tremendous amount of government spending. We still have a huge debt. That's where those concerns are coming in. Silver is interesting because it's more of an inflationary indicator when it starts to outperform, and its industrial use. In terms of oil, oil's a completely different animal. So everybody was so negative coming into this year. We started buying it at 62. Then the Middle East crisis hit. We got that big spike. We got out. But what we noticed was that it hasn't really gone down that much. Still a lot of talk about short supply, even with talk of overproduction. Certainly the producers do not want to drill at these low levels. Also concerns about tariffs. So if we see this WTI go over $68 a barrel, I think that's a very bullish sign for oil. And then you have to ask, what does that mean in terms of the domino impact?
I want to get to all your other sectors here, but just to follow up on the silver call, because you do think silver is going higher, and I've been hearing that a lot today and lately. If someone wants to have exposure to silver to really maximize gains, because we've seen silver outperform gold in years past and decades past, how would they get exposure to silver? What's the best way to really load up on silver?
Well, SLV is a very reliable ETF. It has a tremendous amount of volume and liquidity. It is probably the most popular way to trade silver outside of doing the futures. The only thing that I actually caution people who are going to trade any commodity ETF, whether it's USO for oil or UNG for natural gas or SLV for silver, is to look at the underlying commodity. And that's pretty easy to find. You can just Google silver futures prices and it'll tell you what the spot is, because you really want to watch that first. That's what's driving the ETF.
All right. And then also those solar and EV stocks. Do you have any favorite there? And I want to get to Bitcoin too. So a quick thought.
Well, let's see. I guess the best thing I can say about that is TAN, which is the ETF. Again, let's look at ETFs, right? Because you get this big basket of exposure. This week has crossed the 50-week moving average, which it has not been above since early 2023. And this is in the face of a lot of talk anti-solar and anti-tax incentives and all the rest with BBB. And yet here it is making a massive breakout with great follow-through today. So what does that tell you? Solar is still cheap in terms of an investment, and it is also much cheaper in terms of commercial and domestic use. So that's where I would look for that.
And then last but not least, crypto. How do you go about crypto? Have you been involved? Do you want to get more involved?
I love crypto right now. Not everything, but Bitcoin's getting to 110. That's a big breakout area. Ethereum just crossed over 2550. That is something that I'm really excited about. I haven't even looked at it in a while, but now I would like to see it's a little bit above that. It's trading at like 2570. I think that can go much higher. And Chainlink, which, things that have actual usage, Chainlink being a bridge between the blockchain and things that you can't typically get on blockchain, that would be another good thing. It's trading at about 1370. Looks like it has a double bottom, good upside. So yeah, I'm invested in all of them.
Wow. A final quick thought here. I mean, you mentioned so many names and investment opportunities. I always love chatting with you. And you're generally mostly optimistic. I mean, you always seem to find the opportunities. Do you think the market's heading higher? I mean, what's your final thought here?
Well, like two things. Number one is you got to watch the retail sector, right? Because since 2021, the retail sector peaked then, and it's still down almost 30% from those highs while we're making new highs elsewhere. Consumer is super important, not to be underestimated, certainly going to be impacted by everything, whether it's taxes, tariffs, inflation, and so on. So you have to watch that. And number two is I still love, Nicole, we've talked about this, the thin economy. I think that consumer is going to come into the market even more in 2026. And then look at the shopping habits of people who are thin and staying thin for the first time in their life.
Yeah, oh yeah. Well, it's a whole new world with that. You're not wrong. Mish Schneider, Chief Strategist, marketgauge.com. Nice to see you, Mish. Have a good, happy 4th weekend. Appreciate it.